Hello, folks, and welcome to this week's edition of the Satori Traders Precious Metals News. In our ongoing focus on inflation, right now we are looking at the CRB index in the monthly time frame. The CRB index is a basket of 19 commodities. It's about 40% energy, 40% agriculture, and then we have the precious metals at 7% and industrial metals at 13, I think. So it's a fairly broad look at, in particular, energy and agriculture or food, because we all like to consume energy and most of us like to eat. I know I do. And so anyway, I wanted to take kind of a different look at inflation. Does it exist? Does it not exist? And so for whatever reason, I just decided to throw the three fans pattern on this monthly chart. And of course, we can see that we've got now 3 months in a row of breaking out past that third fan line. And Edwards and McGee, this is the Bible for technical analysts, geeky people like me. When this third fan line is broken, the primary trend tends to resume. And in this case, the primary trend was up. We've had this multi-year correction, and now it appears that price, or the index in this case, has broken out into a new uptrend. And so that's just this week's look at inflation. Let's continue. This is the daily chart of gold. We got this nice V bottom. This is 2 weeks ago. This is a little bit scary as price came down and tested the bottom of the correction channel and the round number 1700 level. But what we've ended up with is this nice V bottom at an obvious support level. And now we've got price, I'd call this a sideways consolidation, basically gathering its energy for whatever's to come next. We've got some other indications that what comes next is more upward price action. And I'm saying that based on we've got a new MACD buy signal off this extremely oversold level. And now we've got energy or momentum at a quite elevated level and rising sharply. And so all systems are go for a continuation of this rally in gold. So we're looking good there. And in GLD, I wanted to get an indication of volume, because there are four primary or fundamental pieces of data when we're looking at price. So we've got open, high, low, close. So that's four pieces of fundamental data. Fifth piece of fundamental data is volume. Everything else is derived from those five pieces of data. So any indicator you want to talk about, moving average, MACD, stochastics, all of those are derived from only five pieces of fundamental data. Point being, I wanted to look at volume to see how gold's bottom or presumed bottom looked from the volume perspective. And so what I've done, this is GLD, not the best proxy for gold, but it's one I'm going to use because it gives me volume. And so what we see, we talked about this last week, we've got a capitulation on high volume as GLD dropped through support. We got a lot of people, a lot of investors puked their shares into the market. That's why we see volume rising. They're capitulating, they're giving up, and then price kind of dwindled lower for several more trading sessions. And then, of course, we've got the same V bottom there. So that looks good. And then what I really wanted to see was new buyers coming in with volume. And that's exactly what we have here, is the last 3 days of the previous week, we had good buying volume in GLD. So that's a good thing there. Let's continue to silver, and silver continues to be strong. And I've pointed, I hadn't said it in the last couple of weeks, but silver has yet to test its 200-day moving average, which as I've pointed out before, I believe that is a sign of strength in silver, that it has not had to probe down to the 200-day moving average, at least yet. Famous last words, right? What's interesting to me in this chart of silver is this energy coil. We've got price in this tight sideways pattern. And Tim Morge pointed out, he actually named this pattern an energy coil. As far as I know, he was the one that named it. And what he pointed out is that the price is storing energy in a tight pattern like this, a tight coil. It's like coiling a spring. And there's only so far you can coil the spring before it lets go. And don't be standing there when it does let go, because that was another thing that Tim pointed out. Whenever this coil lets go, we can count on, or it's pretty high probability, that the move is going to be impulsive, meaning high energy. What we can't predict is which direction it will be. Now, in all likelihood, we would think that it would be up. We're in an uptrend. Anyway, I would expect that the impulsive move out of this energy coil was upwards and will be further propelled by jumping over both of these moving averages. And it wouldn't surprise me to see a spike all the way up to 2820. That could happen very quickly, and then probably a pullback to find support. So we might actually see 2820 next week if the metals get excited, markets get excited about the precious. So same thing here in SLV. I wanted to look at volume. We've got the capitulation sell-off on elevated volume. That brought us down into an obvious support level. And so now we've got price basing kind of sideways, generally upward, and we've got some new buyers coming in on volume. Don't quite have a buy in MACD, but certainly hinting at that. So SLV's looking good. And I made a mistake last week, folks. I told you that Lion 1 would be in production in early 2022. And that was my bad. That's my mistake. It's early 2023. So Lion 1 is an emerging producer. They're fully funded to be in production in early 2023. And again, I'm just correcting a mistake that I made last week. It's early 2023 when Lion 1 will be in production. And to make up for my mistake, I want to share a little bit more about Lion 1. This is the chart. And so obviously they had this was the bottoming action that I pointed out last week. And so they had a nice run, pop up to the 50-day moving average, and then a pullback. And of course, this is a test of the breakout level. And notice when we're dealing with slanted support and resistance lines, the breakout level is not necessarily horizontal. And so pullback to test the breakout level can look like that. And so anyway, my assumption is that Lion 1's gonna find support in here and head off on its new uptrend. There's my bullish bias stepping in again. So Lion 1, so their objective with developing their current project is to have 6 drill rigs on site. And so this news, it was actually March 9, so it's about 2 weeks old. They got their 6th drill rig on site. And so 4 of those rigs are surface drilling rigs, to drill from the surface into the mineral deposit. 2 of them are underground drill rigs, and drill rigs with 1,000 meters of depth capacity, so deep drills. And so this is good news, and not only good news that they've met their objective of having 6 drills on site, but the fact that they do have 6 drills on site. They're serious. This is an aggressive growth company. They've got 6 drills defining this property, and they're on track for production. That's the aggressive growth. How many ways can we say that? And so the reason, another unique aspect of Lion 1, the reason that the underground drill rigs are useful is because back in the 1945 to 1952 period, there was a mining company on this project. This is a known gold deposit. And so there is an existing underground access that allows Lion One to take advantage of those underground drill rigs. And so I'm on Lion One's website, and so this is their image gallery. And so it's always fun. You go out and see what a mining company has on their website. Yeah, I encourage you to do that. And so that red line there and some of this other working under here, this is the adit, ADIT. Adit is the word. That's the word for an underground access like we have here at Tuvalu is the project name. And so when you look at some of their corporate drawings, you understand what you're looking at. That's that existing access that was created back in the 1945 to 1952 timeframe. And so here we have GDXJ, which obviously this is my proxy for the mining stocks. V bottom, it's not as obvious as it is in gold, but we've got some nice follow through, prices pushing back up through this resistance area. It's using the 20-day moving average as support, obviously bumping into resistance at the 50-day moving average and the top of our downward sloping correction channel here. So, but good action in the mining stocks. Energy obviously elevated and rising sharply. MACD is on a buy signal, looking good there. The silver mining stocks, I'd still like to see some more volume come in here in SIL. We've got sort of the energy coil going on. It's a little bit sloppy here in the silver mining stocks. It's really clean in silver metal. But again, this is, we got our V bottom down into an obvious support level, and now, prices dealing with its way, making its way back higher. The US dollar, this is the weekly time frame. The reason I'm keeping an eye on the weekly chart of the dollar is to my eye, it shows underlying strength in the dollar that can easily be overlooked in the daily time frame. And we have to keep in mind the possibility of a strong rally in the dollar. And the first indication of that would be a push up to the 93 level. So the daily time frame, we got bumping along, looking for support and pushing into this resistance level, the round number at 92. And then we've got the median line of this blue Andrews pitchfork. On Friday's close, we're just above that support level and obviously squeezed in by resistance. So I would expect a pop higher there in the dollar when it opens on Sunday. Interest rates, they just keep pushing higher. Here we are, this is the 10-year yield. We're in the weekly time frame. Pushed through, I presumed that there would be a little bit of resistance at this 168 level, and in the daily time frame we can see that it dealt, I think, 3 days. It took 3 days to break above that level. Obviously it did so last week. Very little overhead resistance between this current level and 2%. You could argue that here at 1.8 or so, you might have some minor resistance, but based on this chart, I'd say that we're headed for 2%, no problem. In the daily time frame, remember last week, we moved our price target from 175 up to this 180. If we were strictly following the Andrews Pitchforks rules, we would slide this up. We'd probably do something like, there, 183, 184, somewhere in there. I'm assuming that we'll get a round number effect at 180. And so I'm leaving that target at 180 for this week. And what that might look like would be a spike up to the median line extension of this Andrews pitchfork, and then a pullback below 180. And so we'll see how that plays out. Obviously, MACD's in bull mode, which suggests that the primary trend remains up. MACD buy signal, interest rates are going up. Equities last week, they struggled Thursday and Friday, and did so on some volume. Now this doji candlestick Friday in SPX, you can read, it's kind of hard to read that actually. So in some circumstances, we might call that a bullish, pullback to support at the 20, and then buyers came in and took price higher. So pullback to support, successful test, suggested path higher. But then we've got MACD rolling over and energy, the stochastics rolling over. So let's continue looking at the equities. Here we have the Dow. We got this high energy breakout in the Dow, broke above this price channel, the multi-month price channel there, got a big strong breakout. And so now Thursday, Friday, we've pulled back and we're testing support at the breakout level. And as I mentioned earlier, we're dealing with a slanted support resistance line in this case. And so the breakout level is here. We broke out here, but now when we come back to test the breakout level for support, it's here and it's higher. Notice that it's higher. We're testing support at a higher level than we broke out from. And just something to keep in mind when you're dealing with slanted support and resistance levels. So that's the Dow. Again, we'll have to see, follow through. Is that a test of support to be followed by resumed upward motion? We'll find out next week. Nasdaq, again, hard to say much of anything, just kind of hanging there, say anything. So Brent obviously bumped into that $70 round number, and we got more than just a little bit of a pullback. I was expecting sideways action and then continuation, but obviously we got more of a pullback last week. Thursday we got a strong test, a spike down to the 50-day moving average as a test of support, and then a strong bounce off of there. And so we'll see where we go with Brent next week. Folks, that is all I have for you this week. Have a fantastic week, and I look forward to speaking with you again soon.